Referenced a minute ago this idea of cushion, or the fact that the Fed doesn't have as much of when rates are low and inflation is low. And I'm wondering if you or the committee has thought about your move to raise interest rates as partly responding to the economy, but partly giving yourselves room to navigate in the inevitable future recession whenever that was to come. And do you think that that has played any part in your outlook for policy or recent policy decisions, or is it just a purely based on what the economy is doing?
So it doesn't play any part in my thinking, and I'll tell you why. If you raise rates too quickly, you're just increasing the likelihood of a recession, and that's exactly what you don't want to do. So the best thing you can do, I think the incentives actually run in the other direction. If you're worried about going back to the lower bound, then risk management would suggest that you go a little slower in raising rates and tolerate, and that's likely to be a more sustainable strategy to get further away from the zero lower bound. I think we're far enough away now, though, that the risks are kind of balanced, and so I think it's more just we're just looking at the economy and what does it need, and how do we sustain the expansion, keep the labor market strong, and try to keep inflation near 2%.
Mark Hamrick with the last question.
Well, I'm wondering. I'm sorry. Mark Hamrick with Bankrate. You talked earlier about wage growth and your basic message to workers. How confident are you that when we do see stock buybacks and the like, the workers will get whatever your view of that share is as well, in wage hikes in the near term and in the foreseeable future? Thank you.
We don't have the tools to control that. If companies choose to, companies in our system are free to do what they need to do once they've made profits and have cash to distribute. They can distribute it to their shareholders. They can buy either through dividends or through buybacks. They can pay their workers. We don't play a role in those decisions. The part that we focus on is maximum employment. That's our mandate. So we view maximum employment as the maximum sustainable level of employment, meaning it's not so much that it will cause the economy to overheat. And so I think we've been committed to that. I think we take that obligation very seriously. And over time, when labor markets are strong and companies are hiring, we should see higher wages. But again, we don't really have the tools that will address the distribution of profits and that kind of thing.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.